Uber reported quarterly financial results this morning on Tuesday, August 6th, 2025. And of course, I'm watching this stock closely because I've had Uber stock rated as the best stock to buy here in 2025, and it's already performed remarkably well. Also, I bought Uber shares for my own portfolio, so I'm especially interested in Uber stock. In this video, I'm going to review the company's latest announcements, the financial figures, and I'll share with you my updated proprietary discounted cash flow valuation for Uber to show you what I've calculated as a fair value for this stock. And I'll update my rating on Uber and let you know if I still think it's the best stock to buy here in 2025 or if I think otherwise. So let's take a look.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So one of the bigger things to come out of today's announcement was the company's planning a new $20 billion share repurchase authorization, and the management team saying that underscores their confidence in the business. Now, what I see when a management team announces a big share buyback like this is that the management team feels these shares are undervalued because there's a lot of things that management can do with this capital. And if they choose to go out and spend it on buying back the stock, that shows me that management feels this is a great use of its capital. So I like that. Another thing it does is that it provides a kind of a floor for the stock price because if management already has this $20 billion buyback authorization available and the share price should crash on one day or 1 week or 1 month for any reason, whether it be company specific reasons or macroeconomic reasons, and the management feels it's an opportune time, they can go out and buy back the shares at a lower price, which will then kind of provide a floor because management will keep buying these shares when they drop. Of course, it can still drop and it can still drop further, but it does provide a kind of a floor for a share price when management has this large authorization for repurchase. So during the quarter, the company provided an increase of 18% in the number of trips up to 3.3 billion, driven by an increase of monthly active platform customers of 15% and an increase in the monthly trips per customer of 2%. I love to see this. And I recently saw, similar trends with the company Hims and Hers, where I talked about this, where a company is not only increasing the number of customers, but they're also increasing the engagement per customer. And that's difficult to do because when you're getting new customers, those new customers are usually not engaging as much as your older cohorts. So it's bringing down your averages when you're adding a lot of new customers. A new customer takes time to get used to your system, to get acclimated to your services and find the best use cases for your services and slowly increase the amount of usage. And so that's why when you have a lot of new customers coming in, which Uber did, they had an increase of 15% of monthly active platform customers. And at the same time they increased, that's a clear indication that the company provides a great customer value proposition, which is one of the main reasons why I've liked Uber stock and I've rated Uber stock as one of the best stocks to buy, is because of the convenience advantage, both in the rides business and in the food delivery business. It just adds so much convenience to people's lives. And what I've learned over the previous decade of investing and over my decades on this planet is that people will pay for convenience. Anything else, right? Convenience will remain as something that people will pay for. And I've seen this across the board over hundreds and hundreds of companies that offer convenience. People pay for convenience. Uber offers convenience. Having Uber as an option, and I've often said if I didn't have a family, I would use Uber exclusively. I wouldn't own a car. The cost of car ownership has soared and making it very comparable to just taking Uber whenever you need transportation. This is especially true as most folks around the world are no longer working a traditional 5-day work week where they have to go into the office 5 days a week. There's an increasing number of hybrid and remote working options. And so the need for a car is decreasing. And I've shown you stats where the number of younger people applying for and getting driver's licenses are decreasing. And it's because of companies like Uber that offer younger people a much more attractive option. You no longer have to save up for a car. You can take trips whenever you need to. And parents will feel safer sometimes having your children take an Uber rather than driving themselves because when you're younger, 16, 17, 18, you don't have that driving experience yet. And so it's sometimes safer to take an Uber with a more experienced driver rather than driving yourself. And so for that reason, people continue using Uber. And I don't see that trend reversing anytime soon, especially as you've probably noticed. I've been talking a lot about the tariffs on the United States trading partners, and the increasing trade barriers are only going to make the cost of car ownership that much higher. And then the cost of insurance, the cost of parking, the cost of fuel, the cost of car maintenance, repairs, insurance, etc., all of which are soaring. And if you do your own math, I encourage you, those of you that are interested in Uber stock, as I've done, do some math and see how much a a new, let's say, Honda Accord or Toyota Camry, how much would that cost to own monthly if you were to go out and buy a new one right now, compared to how much it would cost to take an Uber whenever you need transportation? You're going to be surprised with how much more favorable it is to take Uber. And then the convenience advantage, right? You take it whenever you need to. You don't need to worry about parking. You get dropped off right where you need to be dropped off instead of having to search for and look for parking far away. That convenience advantage. And I haven't even begun to talk about the food delivery convenience advantage. In large cities like Los Angeles, it can sometimes take you 30 minutes to travel 5 miles to go and pick up, let's say, your Chipotle, when you can pay Uber $6 or $7 to deliver your meal to your house, and it saves you an hour of your time and adds convenience. You don't have to leave your home. You might be having a few beers and you don't want to drive, and the convenience people are demonstrating here, as I'll share with you more, how much they love this advantage. Revenue increased 18% to 12.7 billion. Income from operations grew 82% to 1.5 billion. The cash flow from operations came in at 2.6 billion and free cash flow was 2.5 billion, highlighting another reason why I like this stock is because of the asset light business model. Uber doesn't own any of the cars on the platform. The drivers are bringing those cars, which are assets worth tens of thousands of dollars that Uber gets to benefit from. That's another advantage of this company is the supply side of the equation. Working for Uber is so much more convenient and advantageous than working for another comparable job. Let's say working at Domino's as a driver, or working at Starbucks or McDonald's, or whatever other entry level jobs you might be considering. Working for Uber is so much more convenient. You pick your own hours. You pick when you want to have a day off. You don't have to ask permission to take a day off. You don't have a manager overlooking every single thing that you're doing. And so people increasingly enjoy driving for Uber and other car companies, other ride sharing companies. And that's brought forth a supply of new and able and willing workers to the company. The company expects the good times to continue, forecasting gross bookings increase of 19% over the next quarter. That would be a sequential increase from the 17% growth it reported in the current quarter. Uber now has monthly active platform customers of 180 million, up from 156 million in the same time last year. I know there's been a lot of talk about Tesla destroying Uber's business because Tesla gets to manufacture its own cars while Uber does not manufacture its own cars. And I think investors are overestimating the competitive advantage of having your own manufacturing of vehicles and underestimating the customer acquisition cost. Do you have any idea how much it would cost Tesla to acquire 180 million customers, paying customers? I think you're underestimating that cost if you think Tesla is going to disrupt and destroy Uber's business. Tesla would have to do so much work to attract this many customers to its platform if or when the company actually delivers driverless cars on the road, which could be several years from now. So I updated my discounted cash flow valuation model for Uber. I now think these shares are worth $119. The current market price after today's results is $89. So I still see significant undervaluation for Uber stock at the current market prices. Furthermore, when I go to fiscal.ai, which is my preferred data provider, and I retrieve the forward price to earnings chart, Uber's trading at a forward PE of 31, which I think is relatively undervalued for a company that's growing revenue by double digits, growing customers by double digit, increasing engagement from customers by double digits, increasing operating income by north of 50%, operating on an asset-light business model with a total addressable market opportunity in the trillions of dollars. I still like this stock. And to update my recommendation, yes, I do still think Uber is the best stock to buy right now in 2025. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.